Alright, in this video, I'm going to be talking about determining invalidation points. So the way I trade, I always want to have a clear invalidation point so I know how much to put on a trade to risk the amount I'm comfortable with. And I know that if price breaches my invalidation point, that trade idea is no longer valid. And I know some people will say, but Dylan, what about the times that you set your invalidation point? Like, let's say you traded this SFP, you put your invalidation point above the wick, which is how I typically trade SFPs, but then price still comes back up, stops you out, SFPs one more time. And yes, invalidation points aren't respected 100% of the time, but that is why I like to use strategies that give me confidence in not just the trade setup, but the invalidation point as well. Strategies that I've found play out more times than they don't. And so, for example, for an SFP, I would want to see things that give me confidence in the SFP. I'd want to see divergences across multiple time frames with momentum and money flow. I would also like to see a decrease in open interest, showing that trades got stopped out as we took out that high. So there are things that can give me confidence in the SFP, and even if you get stopped out once, if you're using good risk management, that's not going to be an issue, and you may have another trade set up on your hands. Maybe you can trade that second SFP if you are seeing the signals continue, if you still have confidence in the trade. And I also like to de-risk my trades as soon as possible. And I mean, that depends on the type of trade it is and the confidence I have in the trade, how quickly I will de-risk and how I will do it. For example, looks like, price might actually SFP this here. So, hypothetically, if I was going to trade this SFP, which might not be the best idea right now because, seems like price is breaking out with an increase of money flow. But let's say I did take this SFP and price started coming back down. I mean, I would want to, maybe lock this trade in at this value area high. This seems like the first, logical spot to take profit. It's a solid place to retest. There's a chance that if we retest the value area high, we may hold it as support and then continue going higher. Again, my confidence in the trade and the type of trade it is will determine how quickly I de-risk. If it's, a scalp trade that I'm not super confident in, I will typically de-risk sooner, and from there I'll put my stop loss at my entry. But if it's a trade that I'm more confident in, sometimes I will, I'll still TP at the first reasonable spot, but I will leave my stop loss where it is at that invalidation point. For example, if I traded this SFP, maybe, if we came back down and I TP'd down here, I would still leave my stop loss up above this wick because, that is still a clear invalidation point for me. I have de-risked, and I de-risked significantly by locking in some profits, lowering my position size. So if I get stopped out here, it's going to be close to a break even, maybe a little bit of profits, maybe a little bit of losses, but I still de-risked significantly. And if I'm still confident in this trade, then, a lot of times I will wait until like TP2 until I'm a bit more confident in this move continuing to play out from where it is before I actually put my stop loss on my entry, just because it is more worth it for me to maintain that little bit of risk, risk the small amount of profits I took out at TP1. Basically, I'm still ensuring a break even, and, it's worth it for me to potentially have a break even because I think there's still a good chance that the trade will continue playing out. There really is no exact science to it. It's really about weighing the pros and cons of de-risking or maintaining risk. And for me, that's something that I've been developing over time. I'm still trying to figure it out. It's just something that comes with time. The more time you spend trading, the better you'll get at determining these type of things. But regardless, I still like to take profit at the first reasonable spot and then at least ensure a break even, make sure that this trade idea is not going to play against me. And I definitely don't want to be, moving my stop loss farther up if I see price coming back up. Like I'm thinking, okay, maybe we're going to SFP the highs again. I'll move my stop loss higher up. I never want to play that game. I will always keep it at that invalidation point that I determined when I entered the trade. I always want to make sure that I have an invalidation for my trade idea. And for that reason, I like to use strategies that give me clear invalidation points and that I've tested to make sure those invalidation points are respected at least a good amount of the time. I'd say you'd want it to be most of the time. And there are a few strategies that I have been using that, give me that. For example, the SFP strategy. Let's say we SFP'd this. The, invalidation is going to be above that wick. Once you see price come above the high, come back down below the high, close below it, and you're seeing signs that make you believe that this is a SFP. You see divergences across multiple time frames on MarketCypher. Maybe you're seeing signs on Coinalyze or EXO that is giving you confidence in this. Then for me, automatically the invalidation is going to be above that high. And a lot of times for SFPs, I will, TP early, like I said, let's say at the value area high, but then I will wait until either a lower high is put in. We confirm a lower high by coming up and then coming down and breaking that last low. Then, I have another spot where I'm comfortable putting my stop loss. If my entry is right around here, then I will move my stop loss to entry at that point. I try to find a balance between, maintaining risk and trying to stay in this trade for as long as this idea is going to play out. So, if I'm thinking we're going to start a downtrend here, then, it makes sense to wait until the next lower high is put in before moving my stop loss down. Or if we just see a very, quick move down and at that point I've hit my TP2, maybe TP3 as well, then I'll just put my stop loss at entry from there. Once I have a decent amount of profits locked in, I like to then just move my stop loss to entry. Another type of trade setup that gives me a clear invalidation is absorption. If you're trading absorption, then, the invalidation, at least off the bat, is going to be the higher low that, started forming the absorption. So in this case, from here to here, price put in a higher low, but CVD put in a lower low with open interest putting in a higher high, showing that shorts were coming in, potentially being absorbed. And so in this case, the invalidation is going to be below that low, because if we break that low, that absorption idea is invalid, and this was just leading CVD. And a lot of times with these, I will move my stop loss to below a fib level after, TP1. Like a lot of times I'll enter at the golden pocket. I like to wait for a golden pocket retracement and then see the absorption. So, I'd actually be willing to bet this was a golden pocket. And it definitely was. If I can place this fib, you can see we came right into the golden pocket there. So, after TP1, maybe I'll move my stop loss to down below the 786 with the profits I took out here. That should ensure a break even, and maybe then I can let it run. Or you can be a bit more aggressive with it. You can take profits a bit more aggressively and maybe put your stop loss at your entry. But in this case, that would have played against you because you probably would have gotten stopped out right over here. Unless you entered like right at the lows right here, which I probably wouldn't have. I probably would have entered a little bit higher. So, sometimes putting your stop loss at entry can play against you, but also sometimes leaving your stop loss in risk can play against you as well. This could have came down and stopped you out. In this case, it didn't, but you're always trying to, weigh those two options. Now, another trade strategy I use is just kind of ninja entries off of key levels. For example, the daily open down here is a key level. Maybe you expect a reaction from it. And in this case, we do have an SFP potential right here with this wick. So, you do have sort of a trade idea. Inside of a trade idea, you can look for an SFP into that low to kind of go along with the theory that you're going to get a bounce from this level. But even if this CDW potential wasn't here, I would still probably trade it similarly. If I saw signs that gave me confidence in a bounce here, stop loss goes below the wick. and then I would try and lock this trade in immediately, maybe at the value area low, which is like right here. And then from there, I would probably put my stop loss on my entry. That's kind of how I trade like ninja bounces like this, because a lot of times you can see like a reaction from a level, you get a good move up, you get some profits, but then you immediately just come back down and start going lower. So, for these kind of scalps, I like to be more aggressive with it. And of course, the more confluence you have at a level, the more confidence you can have in it. So in this case, we have, the daily open. It's at the lows of this range that we've been trading in. We also have an SFP potential, which, kind of adds layers of confidence. If you see an SFP with confirmations, that will give you more confidence in the trade. So maybe with that in mind, I might want to leave my stop loss below the wick, just in case we come back for a golden pocket retracement before higher. You really have to weigh these things. And like I said, that's something that comes with time and experience. If you're trading a market structure switch, let's say, we were in a downtrend here and, all of a sudden we break structure, we break the lower high, and then we come down for a higher low before a higher high. Now we've kind of officially, switched structure here. I like to base my invalidations off of structure as well. So, let's say I longed this retracement here, this golden pocket retracement, immediate invalidation, maybe it was below the wick, maybe it was below the 786. And then as, price goes up, I hit my TPs, I might move my stop loss to below that last higher low. If the uptrend is going to continue, you would expect this low not to be taken out. And so you can, base your invalidation off of market structure as well. Of course, there's the possibility of us SFPing this low, which means swing failure pattern, meaning we failed to, make a new swing low here. We failed to break market structure. And in that case, the trend can't continue and you may have gotten stopped out here. So, like I said, nothing is an exact science, but, you have to think if you're taking this trade, then you're betting on the uptrend continuing, you're betting on the uptrend being strong, and so it makes sense to put your invalidation down below this low, even if there's a chance that we SFP it and you get stopped out. Maybe you would want to have a little bit more confluence around your stop loss. So, in this case, maybe you would have wanted to move it down a little bit below the 786, just in case we SFP this and then get a bounce from the 786. That's something you can look at. But in general, I also like to move my stop losses up with market structure. If I'm trading a local uptrend, then a lot of times I will move my stop loss into profit below a significant low. So yeah, like I said, the longer I've been doing this, the better I've gotten at kind of managing my trades, determining invalidations, determining my confidence in invalidations, and kind of making decisions based on my confidence. And some things that have helped me are, testing my strategies, either, going back in time using the bar replay tool. But for me, I have found that this style of trading, using strategies that give me clear invalidations and where I try to de-risk as soon as possible, relatively speaking, depending on my confidence, sometimes I'll maintain risk for longer if I have more confidence. But in general, this strategy is what has given me the most success. It has been a way to limit my emotions when trading, and even if one plan goes wrong, even if I get stopped out and then, price starts moving in that direction, it sucks to watch, but I know that there's always another plan to be made. There's always going to be another opportunity. And, in these markets, opportunity comes frequently. All right, well, I think that is about it for today. Thank you all for watching. If you enjoyed, please consider leaving a like and subscribing. I really appreciate it. And I will see you all in the next one.